Hey guys, Max here, and it is the new year. It is the 2nd of January 2022, and we're going to be continuing with these daily updates. Of course, I took yesterday off, so I didn't put a video out, so we've got a fair bit to talk about. There's some updates with the Omicron variant, and of course some trouble in China, along with just a bit of a recap of the year we've just had. So to kick us off, it is of course now Sunday. Markets were closed yesterday, but they were open the day before for the last day of the year, and there wasn't too much movement in either direction. The S&P 500 fell about 0.2% on the day, which is hardly news these days. The Nasdaq fell 0.7%, which is a little bit worse, but again, nothing too major, especially after the year we've just had. The dollar spot index actually fell a little bit as well, down 0.3%, and bond yields didn't really move anywhere at all. Oil actually fell about 2% and gold actually rose about 1%, so no real moves in any real direction for the day. Most of the discussion then has been regarding the year as a whole, the year we just saw, and the results which have been absolutely crazy. Now, the S&P 500 and the Nasdaq as well for that measure rose by about 20% across the year, which is just insane, and that's compared to an historical average of about 8%. Obviously, this is unsustainable, but so many people today are just under the assumption that this is normal and that it will continue forever, but the Fed's policy is changing. The money printer is still churning away, but in a few months it will turn off and interest rates will rise, and the chances are that 2022 will be a very different year as a result of that change in policy. Volatility as well across the year has been ridiculously high, with flash crashes over fears from the Delta variant and the Omicron variant, only for rallies to come later when the realities of these variants are finally known and the markets sort of realize that they aren't as serious as they could have been. We saw vaccine boost effects where stocks surged on the quick vaccination of billions of people across the world, and that helped to ease concerns about the virus and its variants as well. But that effect then started to disappear when the data developed, suggesting that third jabs or even booster shots were needed, and that even then there were still problems or issues with the effectiveness of these vaccines. We had a huge panic in the markets back in September when the Evergrande issues came to the forefront of the news, and then the markets just started to ignore all of these developments, even as the problem of debt-ridden Chinese firms has only gotten worse and contagion has actually developed and started to spread. We've had rising tensions with Russia over Ukraine as Putin seems determined to stop NATO from expanding, but his overly aggressive moves and remarks seem to be pushing the states that he wants to remain neutral closer to the West and the US and into NATO. The crypto markets obviously had an absolutely crazy year, with 2 massive bull runs and a couple big bear runs as well. Now, when the year started out, Bitcoin was at about $30,000 and Ethereum was at about $1,000. So there is a lot of talk from people saying that it's impossible to make a loss because most cryptos are up on the year. But of course, that only applies to people who have been in the crypto sphere and invested in crypto before the year started. As always, there are loads of people who have bought Bitcoin at $70,000, Ethereum at $5,000, and Dogecoin at 75 cents. And those people are, of course, sitting in the red by quite a large amount. If nothing else, we've seen millions of people join the crypto sphere, determined to invest in their lottery token and make a few $1,000,000 before cashing out. And of course, most people have been entirely unsuccessful in that endeavor. The crazy rise of Dogecoin pushed by yours truly, Elon Musk, saw a few very vocal millionaires like Pro the Doge who were adamant the coin would never fall and would keep rising forever, and of course these people were wrong. And then came Shiba Inu, a coin literally designed to run off the hope of Dogecoin and ride off on its coattails, but in the end it started to outperform Doge and ran up on its own. Then we saw Floki Inu, another token just like Shiba, just trying to make some people rich in what really amounted to a greater fool scheme where the early people get rich and everyone else loses out in the long run. Now, speaking of schemes like that, we saw the growth of NFTs, probably the single most speculative asset class in the world, or at least since Tulip Mania in the Netherlands a few centuries ago. And of course, 99% of it is built on hot air, and it is a bubble, and the people making the NFTs, minting them and selling them, have found themselves making huge profits, whereas the people buying them are getting shafted to say the least, even if it will take a couple more years for them to realize what's going on. We've also seen speculative bubbles pop up in luxury goods markets, like with special rare watches, or even watches that actually aren't rare, like Rolexes. There are a bunch of watches whose prices have doubled or tripled this year alone, and of course, to the dismay of the r/Rolex forum, this is not sustainable, and it is a result of the everything bubble. There is just too much money going around, and these people have deluded themselves into thinking that bog standard Rolexes made by machines are investments, so demand for them has been rising. I've seen a scary amount of people claim that Rolexes have never lost value in their history and that they've always behaved like this, but literally just go back 5 years and you see how incorrect that is. Go on Chrono24 and look at the prices of these watches in the past, and almost every Rolex would lose value the second you bought it, just like other watches did. Now, the second-hand car market has been absolutely crazy as the microchip shortage has put limits on supply at the same time as the everything bubble has boomed. I've personally been wanting to buy a pretty specific car over the last few months, but that car is about $8,000 or $9,000 more expensive than it was 18 months ago, so I'm just refusing to actually pull the trigger on it. In general though, this year can be easily characterized by the everything bubble, by quantitative easing and the money printing, by asset price inflation and consumer goods and services inflation as well. For me, the important note is that we shouldn't get arrogant. We should remember that in a bull market, everyone's a genius. And remember that even people like me, who have been vocally speaking out about fears for a coming bear market, even we're up over 20% in our investments in 1 year alone. Just remember, that is not sustainable, that it will not last, and that no one ever went broke taking profits. So that is pretty much what happened in the year. So what happened yesterday and the day before? Well, we obviously have more news regarding the Omicron variant and fears that may have reduced recently but are definitely still present regarding the huge case numbers we're seeing. Most countries who are seeing these sky-high cases still aren't seeing too many deaths or hospitalizations, so the calls from the media to shut the country down again are mostly being ignored, but lots of administrations and governments are looking for ways to reduce the spread of the variant without having to lock people down. Lots of different areas have put back into place rules regarding masks or face coverings, some forms of social distancing, and of course, booster jab programs are going manic right now. In the UK, where I am, there were lots of calls to shut down everything before New Year's Eve, but of course the government didn't want to do that, so they held off. But now that that date has come and gone, more restrictions are looking a little bit more likely again. Face masks are going to be mandatory in schools again, they're already mandatory in shops again, and these sorts of rules coming into action all over the world are probably going to be littering the news cycle for the next few weeks. One thing I do have to say is that the Tories, or the Conservative Party in the UK, have by and large been pretty awful and unconservative this last year, but Sajid Javid, the new Health Secretary, seems to be doing everything right, and it's a welcome change of pace to see someone competent in that role for once. Now, speaking of the virus, the Xi variant in the Chinese city Xi'an is spreading like wildfire despite very harsh restrictions, or as I should say, full-on lockdowns, because that's what they are. The entire city of 13 million people, so a very big city by all accounts, has been kept under strict wraps, and it doesn't seem to be opening back up anytime soon. Of course, the CCP is still claiming that they are only seeing 100 new cases or so each day in a country of almost 1.5 billion people, but of course these figures are just lies. There's no other way to put it, they're lying. China has been reducing foreign travel to try and curb the virus a bit. They've shut down the border with Vietnam, and the government over there is trying to get it back open, as the closure is disrupting trade and costing both countries lots of money. But in the grand scheme of things, in the grand scheme of problems for the Chinese economy, this one doesn't even crack the top 100. Now, speaking of problems in the Chinese economy, January could be a big month for defaults for major Chinese firms, as there is almost $200 billion in bills, bond payments or other liabilities to be paid in January alone. Now, to put that into perspective, the bond payments that put Evergrande and other property giants underwater were only $100 or $200 million large, so these $200 billion of liabilities that will come due will cause problems for some companies. There is no doubt about that at all. Policy for the housing market in China is still pretty tight, even after the CCP has claimed to be in full support of the industry. The central bank is trying to encourage other firms to merge or acquire with failing property developers to try and prop them up, but as of yet, we haven't seen much success with that, and to be honest, I don't know if we're going to. We're still not 100% sure what the CCP's aims are here. It seems pretty clear that they're happy to see the property bubble deflating, they're happy to see prices falling, but they refuse to say that because the citizens who own property are losing money and they are unhappy about that. The CCP is also unhappy that this deflating bubble is hurting the economy of the country, but there's just no way around that. It seems, from my point of view at least, that the CCP overestimated how influential they could be with the economy, how effectively they could manage the property bubble deflating, and they're flailing a little bit, seeing the rest of the economy take a hit that they thought would be avoidable. Now, over in Europe, we've seen ridiculous price rises to energy over the last couple months, and they don't seem to be stabilizing on their own. Liquid natural gas is being imported from the US in huge tankers in an effort to try and bring prices down, but there is still far too much reliance on Russia and just a lack of supply in general, so prices are still high. Now, despite that fact that energy prices are sky high, Germany has just announced it is shutting down half of its remaining nuclear energy plants. Now, if you want to read about the most pathetic Green Party in the world, look no further than the one in Germany. They have been an enemy of progress for decades now. They have opposed nuclear energy at every possible opportunity, despite the fact that it's literally the cleanest and greenest energy source in the world, and they've just done another disservice to their country. Half of the remaining plants are shutting down. Germany will continue to burn coal, which literally poisons its inhabitants. The mental gymnastics going over there are ridiculous to say the least. Now, at the same time as that's happening, there is a small movement in the EU to try and get nuclear power recognised as green and environmentally friendly, which again should be, because it is, but there's no doubt that there will be a lot of resistance to this, not least because it's also being pushed in conjunction with a plan to get some natural gas plants recognised as eco and green as well, which is much harder to get your head wrapped around. But what does this all mean? It means higher energy prices for Germans. It means higher inflation for longer and a more polluted country in the future as well. In short, it's just bad news. Now that is it for the day. Of course, it's January and I'm still doing daily updates. I'm going to keep doing them because you guys seem to like them so much and I quite enjoy making them too. So they're going to keep coming. Now, if you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.